Welcome to my next part of the series, that is the technical analysis. In this, you will be learning about the candlestick patterns. I have taught you about what is candlestick, right? You studied about the candles, which represent the price movement, whether the price of the company is going to go up, down, how it is represented. You have learned. Now, then later you studied about the different types of patterns in candlestick, like you might have studied about the doji and different types of candles. Now you will be studying about the candlestick pattern. In the candlestick, that is in the whole graph, you will be having patterns. There will be different types of pattern which can predict the movement of the price, whether the price of the company will go high, whether the price of the company will fall. So now let me just start immediately without wasting any time. So now you have this pattern called the wedge pattern. The name itself represents. So here the name of the patterns will tell you generally the kind of pattern it is. So it is nothing complicated. You can look, it looks like a kind of a wedge. So here what happens, you can see that the price, the graph is shrinking, kind of shrinking here, right? And then the direction in which it breaks. So you can see the wedge, you can see that wedge kind of structure. The direction in which it breaks the wedge, the company is going to show that moment generally. So these patterns are almost always true. Most of the time it works. So here you can see that the wedge, yeah, if you imagine a hypothetical wedge like this, so the company movement, price movement is like this. So when a candle breaks the graph, so you can see there is a red candle which broke the graph, right? Here, if you can look here closely, you can see a candle which had gone down below the wedge. According to this pattern, the graph had to go up, right? It has to keep moving. But what happened here? The red candle broke the wedge pattern. So the pattern is being broken downward. So the pattern got broke downward. So what happens? The company shows a downward movement. And here this is the falling wedge. This is the rising wedge pattern. Here we have the falling wedge. So if a candle breaks the pattern, so here you can look at the red candle, so a green candle, sorry. So the green candle went upward, so the pattern is broken. So whenever there is a break in these patterns, which I'm going to tell you, so there are different kinds of patterns, right? So if there is a break in the pattern in any one of the direction, the company will generally show that direction moment. So if it has been broken downward, what will happen? The price will keep falling. So if you're trading, for example, you can just short the company, you can sell the company. And here, if the company breaks the pattern upward, if a falling company breaks the pattern upward, the wedge pattern, falling wedge, then the company will generally show upward movement from there. So you can buy the company in intraday. Now you have the flag pattern. So in the flag pattern, what happens is you can see a kind of flag. There is a pole of the flag, then the flag, there is a flag kind of structure. If you draw two lines from the lows of the pattern and the highs, you can look that there is an moment. So the direction in which the flag pattern is broken, it is the company is generally going to show that direction of movement. So for example, you can look, there will be a pole kind of structure in the flag, then there will be up and down, then there will be a movement in one direction. If the pattern is broken upward, the company will generally show upward movement, and if the company price falls down, if it breaks the pattern downward, then there will be a downward movement. And the same way we have this is called the flag pattern. It looks like a flag. Now we have the triangular pattern. So again, like the flag pattern, this is you have this triangular kind of shape, and the company price moves in this pattern. You can look, right? The price went up, then it had fallen. So this is kind of triangular structure, and this is symmetrical triangle. Here, if the pattern is broken, if the company goes upward, then it is mostly expected to show a further upward movement in the price. So you can buy the company if the pattern is broken upward, in the upward direction. And in the ascending triangle, this is called the ascending triangle. Ascending means the triangle is pointing upward, right? So here what is happening? Here the price is going again upward, and the pattern of the graph is broken upward, so the company is expected to show an upward movement. Here the pattern is descending, then the price has been broken, so you can sell the company. So this is another kind of pattern known as the triangle pattern. Now we have the cup and handle pattern. So this is very easy. You can look at the pattern, however the graph is moving, but you can see here there is a cup kind of structure, and the cup has an handle. See, you can see the handle, right? It looks like a cup with a handle to hold the teacup that you have. So the company price moves within the cup, touching the lines. If you draw an imaginary line in the pattern, then if you see that the bottoms of the graph are touching the line, then there is a handle kind of structure. If the handle is broken upward, if the pattern goes above the handle, the imaginary line that you draw as an handle for the cup, this is the cup, this is imaginary line. So if the pattern is broken upward, if the pattern goes above the handle, then generally the company is expected to show an upward move because the pattern has been broken upward. Similarly, you have an inverted cup. See, this looks like an inverted cup with an handle, right? So this is the cup and this is the handle of the cup. So here again, if the pattern is broken upward, the company will be expected to show an upward movement, and if the handle is broken downward, the company will be expected to show a downward movement. So these are different kinds of patterns that you can see. So again, these are the candlesticks. If you see the ups of the candle that are touching the cup, and then the handle kind of structure, then if you see if it is broken in any direction, if one of the candle goes very up above the imaginary line of the handle or below, then the company is expected to show that direction. Now you have the head and shoulder pattern. So here you can imagine this topmost. So these three kinds of mountain structure you can see, right? So here you can see this this smaller mountain, then a bigger mountain, then again a smaller mountain kind of structure. So this is called the head and shoulder pattern. This is the shoulder, this is the head longer, and this is again the shoulder. So if the pattern, here you have the neckline. So all the three, so this mountain, and this mountain kind of structure is starting from here. All are touching here. So what happens if this neckline, so this is called the neckline. Okay, so the patterns on which the mountain is resting in the hypothetical situation, if you draw a graph like a mountain, so here the line that it touches is called the neckline. So the direction in which it breaks the neckline, if a candle goes below the neckline, if the candle is going below the neckline, then the company is expected to be bearish because the company pattern might go more below. And if it breaks it upward, we also have an inverted, for example. So in the inverted, again the same thing, this pattern is inverted. You have the shoulder, you have a longer head, you have the shoulder, this is the neckline. If the line is broken, if the neckline is broken, the company is expected to go up in the case of inverted head and shoulder. So these are basically the patterns in the stock market. If you look at these patterns in the candles, you can easily expect the movement of the company, whether it is going to go. So in case of intraday trading, you can set your stop loss here, somewhere here you can set your stop loss, and you can expect like that. So what happens in these patterns, you can easily predict the moment of the company. If the neckline is broken here, then the company is expected to show downward movement. Here in this case, if the neckline is broken upward, then it is expected to show an upward movement. Then in this case, if the handle of the company, if the handle is broken upward, then the company is expected to show upward movement. Here in the case upward again. So like that. Here if it goes downward, then the company, if the handle is broken downward, the company is expected to show downward movement. So that is what is called the patterns, and you can easily predict the moment of the company from these candlestick patterns. So just memorize these patterns, and nothing to memorize. You don't even have to memorize. Just you have to remember the normally how a pattern looks, and you have to just imagine a line that how the company is moving, and then you can easily see if the pattern is getting broken in any direction, and then easily you can make a decision whether you have to buy or sell the company. Now next video we will be discussing about the technical indicators. We have something called as indicator, the moving average, and etc. So that is, we will be moving ahead. So if you haven't created a demat account yet, and if you haven't started trading, then immediately open a demat account from the link in the description. Subscribe to the channel. Subscribe to the channel would be wonderful. Thank you.